Today is Sunday, February 2nd, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button and let's get into it. Since my last update, I did keep my portfolio exactly the same, so I did not make any position changes. These are going to be all 12 of my current positions. Right now, Meta, Nvidia, Microsoft, Costco, and PayPal are my top 5, and those are going to make up 49.33% of my portfolio. Right now, Nvidia is definitely the biggest drag on my portfolio. Currently, it's down 11.93%. From the peak of the trading session on Friday to where it ultimately closed at, there was almost a 6% drop. Depending how the market looks on Monday, that's a position that I'm going to be looking to buy more into. I would most likely try to bring it from the 11.7% weighting that it has right now all the way up to 13. Right now, I have 81% of my portfolio invested, which means I have 19% sitting in cash. For the events that happened since the last update, on Wednesday, as expected, Jerome Powell decided to keep the federal funds rate exactly the same. On Thursday, the GDP came in slightly lower at 2.3%, which was going against the 2.5% that was expected. Initial jobless claims came in better than expected at 207,000 versus the expected 228, and pending home sales was a major miss with a minus 5.5% when the street was expecting a 0.3% gain. And then on Friday, the PCE report came in exactly as expected at 0.3%. And then the core PCE also came in as expected, which excludes food and energy, which was at 0.2%. And then for next week, on Tuesday, we have job openings. On Wednesday is the ADP employment report. On Thursday, we have initial jobless claims. And then on Friday, we finish it off with the employment report, which is going to have the employment rate, the unemployment rate, along with the hourly wages. This is what the SPY chart's going to look like right now. You can see that the SPY price is in between the 15 and the 5-day. The way that I look at it is that the SPY price can cross below the 15-day moving average, but as long as the 5-day remains above it, we're still in a bullish trend. And I wait until the 5 and the 15-day cross to determine which way the market's going. As an example, this is when the 5-day crossed above the 15-day moving average, which indicates a bullish direction. During that bull run, the SPY price crossed below the 15-day moving average, but the 5-day always remained above the 15, and then we saw a continuation of the bull run, which is different than what happened more recently, which is when the SPY price crossed below the 15, but it actually brought the 5-day down below with it as well. And from where that cross happened, we started seeing the declines. So for the current moment, as long as the 5-day doesn't cross below the 15, we should still see a continuation of the bullish run. When I'm looking at the SPY chart, I'm checking to see if there's any levels at which the SPY price closed at repeatedly. So I see that these three areas all closed around the same price. So I'm going to put a horizontal line there and use that as an indicator as to when I'm going to add to my current positions. I found that it's best to buy into weakness and sell into strength. So essentially do the opposite of what the masses are doing. So as long as the SPY price stays above this level, I'm pretty much going to keep my portfolio the same. And if the SPY price drops into this range, that's where I'm going to be looking to make more additions. Since my last update, Pershing had a gain of 2.49%, my portfolio saw a drop of 1.03%, and the S&P 500 had a drop of 0.46%. Which brings us year to date. Pershing is at a gain of 8.82%. My portfolio has a gain of 3.3%, and the S&P 500 is at a gain of 2.93%. That's going to do it for today. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and I'll catch you on Tuesday.